Stanley is strengthening its push into private markets. Today, the firm announcing it will acquire EquityZen, a trading platform connecting retail investors with private company shares. Excuse me. For more on the deal, we're joined by Morgan Stanley's head of wealth management, Jed Finn. Jed, excuse me, thank you for being here. Tell us the rationale behind this deal.
Thanks for having me, Leslie. It's a great day for Morgan Stanley. It's a great day for EquityZen. And most importantly, it's a great day for the clients of both of our organizations. You asked about the rationale for it. Look, private markets is growing at an incredible clip, as I think you've reported on many times in the past. The average company was private for about 5 years, 20 years ago. Today, that's up to 14 years. And that trend is happening for a variety of reasons, but it creates some challenges in the investing ecosystem. One of those challenges is the average investor isn't able to participate in all of that wealth creation because it's mainly institutional investors, VCs, that are getting in early in the company's life cycle. And then the other challenge is for the employees at those companies, they don't get liquidity. And while others have attempted to address those problems, whether it's exchanges or bespoke broker-dealers, no one's really solved it at scale. And the combination of Morgan Stanley and EquityZen delivers that. On the Morgan Stanley side, we've got demand with our $7 trillion in assets and 20 million clients. And we've got supply with the thousands of private market companies where we are the cap table manager. And we've got our partnership with Carta, which has a multiple of that. So we've got demand and supply. We just don't have things connecting those two. And that's where EquityZen comes in. And we're really excited about the value that it's going to create.
Jed, one of the first topics that tends to come up with announcements like this is investor protection and investor education. What is that process going to look like?
Yes, well, we take that incredibly seriously at Morgan Stanley. As you might have read about in the past, we've invested in our AML policies, in our KYC. We have a risk tolerance framework. We have an overall asset allocation framework. And the nice thing about professionalizing the private market part of the ecosystem is it can fit directly into our overall risk management portfolio and franchise approach. And so this is actually going to improve investor protections as we get these two firms integrated.
What have you seen in terms of demand from clients for private market access? And are you concerned that just the overall level of fervor that we're seeing could lead to negative repercussions? I mean, in addition to your deal announced today, I saw 2 other firms having kind of similar tie-ups, whether it's just expanding their reach into private markets through an exchange or through data collection. So I'm just kind of curious, how you see this whole ecosystem shaping up.
Yeah, it's an important question. Let me answer the second part first, which is by having the exchange fit into an overall wealth management firm, we actually address a lot of those issues. Managing client risk is at the core of what we do. Right? We're not making market calls. We're protecting clients and their wealth over an extended period of time. And so having the ability to fit private market shares into a holistic asset allocation is going to address a lot of that risk. Should it be 100% of your portfolio? Absolutely not. But we're working very closely with our global investment team to make sure that for every single client who participates in the space, they're doing it in a risk-managed fashion. As it relates to your first question around demand, honestly, it's been off the charts. We've seen a lot of raises in a lot of these private company names, while some of our highest net worth clients have benefited from the unique access we have on a deal by deal. We want to bring it to our entire 20 million clients and the almost million clients that EquityZen has as well. And again, this is a unique opportunity to do that. So we're extremely excited.
For investors who are listening in, might be curious, what do you think an appropriate weight would be? Is this going to be kind of like how you would think about a precious metal or something? Maybe it's 10% of an overall basket?
Look, our overall weighting towards alts in a portfolio is around 10 to 15%, depending on the risk profile. And so this would fit into that type of a category. But one of the things we're doing with our analytic team is being able to model the underlying securities so we can get that right optimization to fit together for the overall long-term goals. But you're in the right ballpark.
And then in terms of the broader markets, this is such a busy week, really such a busy day with regard to the Mag 7 reporting, at least 5 of them in the next 2 days. You've got ongoing trade talks in Asia, as Eamon was just laying out, the Fed meeting today. How are clients navigating the multitude of cross currents right now? What are the conversations you're having with them?
It's a confusing time, to be honest with you, and it's weird to say with equity prices the way they are. But on the one hand, you've got a hot war still in Ukraine. You've got rising deficits and debt around the world. You've got tensions growing between the two global superpowers. Unemployment in the U.S. is low, but it's ticking up, and wage growth is stagnant, so that's all the negatives. But on the positive side, as you said, equity markets are high, capital market activity is increasing, the consumer on average is still spending, GDP growth is still there. The impact of the tariffs have not been as severe as people thought, and we're on the precipice now of widespread adoption of one of the greatest productivity enhancing technologies that we've seen potentially since the wheel. And so it's very clients to make sense of these opposing forces. And so what we're there to do is help them figure out what is the appropriate risk budget? How much are they comfortable losing? What are they trying to achieve long term? And it's less about picking a specific price on the market, and it's more about having that right combination of assets that can support them and protect their portfolio as the volatility continues to play through the cycle.
Yeah, and that's where the whole ethos around private markets comes in, as a diversification play as the public markets become increasingly concentrated. Jed Finn, thank you so much. Appreciate your time this morning.
Thank you for having me.